It's indicative of just how wild the first quarter has been on Wall Street after soaring to all-time highs last month. The Dow did an about-face. And as you can see, we are poised to finish the quarter with a decline on, the whole quarter. So what can investors expect from the markets in the second quarter? Well, Chuck Lieberman, Chief Investment Officer with Advisors Capital Management, is bullish in the near and long term. Peter Schiff, on the other hand, president of Euro Pacific Capital, author of Crash Proof, says first will come the frogs, then the locusts, then it will rain blood, and there's nowhere to hide. All right, Peter, make your case.
Well, first of all, we can see the pillars of our house of cards economy collapsing before our eyes. You can see what's happening in the mortgage market and the home building market. But what's going to follow that is going to be a big drop in home prices and consumer spending. And your previous guest mentioned that he thought home prices could drop 35 or 40%, but then assumed that would have no impact on the economy. When that happens, consumer spending will fall off the edge of a cliff, corporate earnings will go with it, and then we'll be in a recession, we'll have a big increase in unemployment, and then it's going to get worse from there. Because then the dollar's going to collapse, and that's going to send interest rates and consumer prices through the roof, and then we're going to have a real recession.
Is there any good news? Any good news at all, people?
Well, I suppose if you're smart enough to understand what's going on and you get your money out of the dollar and you get out of the U.S. and you own some of these foreign markets and foreign stocks and you own some precious metals, commodities and gold, I guess you can make some money and take advantage of other people's misfortune.
Okay.
And if you want to look at that as good news, I guess you can.
Now, for those who aren't familiar with you, this has been your prediction for how many decades now?
Well, not decades, but it's certainly been my prediction for the last 7 or 8 years, and I've been dead on right.
You have?
Sure. Look what's happened since 2000. Look what's happened to the value of U.S. stocks versus every other asset on the planet. Look what's happened to the price of gold, to the price of oil, to the price of other commodities. And everything that's happening in the housing market right now, I laid it out dead accurately a couple of years ago, and I've got it all in my book, Crash Proof. I predicted everything that's happening.
Oh, it's in your book. Okay, Chuck.
It is in my book.
Chuck,
have you read it yet, Mark?
No. Chuck, I prefer not to become suicidal. Chuck, have you gotten anything right?
A few things. I'm not claiming to have gotten everything right since the dawn of man, but I think my track record is also public. I did happen to look up Peter's track record and noticed the same thing that you did, Mark. It's a stop clock, and the worst thing about it, I think, is that it really discourages people from investing when they could have been making a lot of money.
Well, make the bullish case here, Chuck, because there's a lot to worry about. We're coming into corporate earnings season. There are not a lot of optimists there. The economy is slowing down. The dollar, which has been weak, has strengthened a bit, but it has been a problem. So make the bullish case.
Well, the bullish case is that the slower growth in the economy is exactly what the Fed wanted. The Fed didn't raise interest rates for no reason. They wanted to slow the economy down some, because if you look at the labor market, it's been getting progressively tighter. We have one of the lowest unemployment rates in the post-World War II period. And the impact of that is very visible in behavior of wage rates, which have been continuing to accelerate. We've gone from something like a 1.7% wage rate increase in 2004 to over 4% today.
Yeah, Mark, first, I got to say one thing real quickly.
Make it fast, almost out of time.
Yeah, I'm not a stop clock. I haven't discouraged people from investing. I've discouraged them from investing in the U.S. and encouraged them to invest abroad instead.
Where the Dow
and in commodities.
Gone.
And my clients have done so much better than the clients of mainstream Wall Street firms who have been stuck in the U.S. market for 8 years.
Where the Dow has gone from 7,500 to 12,500.
Yeah, it's underperformed everything else.
Okay.
Yes, it has.
Okay.
Take a look at other markets and other commodities.
Americans eat dollar assets.
Chuck Lieberman and Peter Schiff, thank you very much. Commercial break. We'll be right back.
Thanks, Ron.